Hello and welcome to the Short Vol Show. My name is Dave, and today we have yet another day with vol up and markets down. This seems to be a trend this week, maybe this year, of not always going straight down for these short vol products. And what is someone to do about this? As been pointed out by many people, some of us haven't made a lot of money because you can't just rely on these things going straight down anymore. By the way, today's show is sponsored by Gorilla Trades. Check out Gorilla Trades, who just released their new iPhone app and has had excellent trade recommendations this whole year. You would have made a lot of money if you've been following their recommendations. They also provide emails a couple times a day telling you what's going on in the markets, what the numbers are, what stocks to check out. It's a great way to keep you engaged in the markets so that you can make money. What to do about this whole thing with UVXY not going down? Well, one thing to do is, if you're an active trader, is to sort of trade it back and forth. Scalp in and out. When UVXY goes up, sell some. When it comes back down, buy some back. However, I always keep a little bit of either flat or a short delta, because I know that eventually it is going lower, but just staying short deltas all the time, it's not going to add up to a whole lot of money, especially in this environment when we're just kind of like hanging out for long periods of time. I'm trying to fix that part on the screen that's making my head look yellowish. Let's see if I can get rid of that part where you can kind of see through my head. All right, that might be better. Let's see. Does that look better? Anyway, so what's the plan? Well, noticing that owning puts, a lot of people shy away from owning puts in UVXY or VXX because they kind of just rot away, and you have to be right in a limited period of time. It's not quite as bad as being long a TVIX where you have that clock really ticking, but if you're long puts in a UVXY, you've got to be right within a certain period of time. Thus, why a lot of people have the strategy of owning put spreads or being short call spreads or being short naked calls. The other thing to do is instead of just being short naked calls, you could be long calendar spreads. Now, what is a calendar spread? A calendar spread is when you buy an option in 1 month and sell it in another. And being long calendar spreads is the kind of strategy I'm talking about here. And sort of trading in and out, if you're just trading stock, then you can scalp in and out of stock by buying or selling it. But with options, you have much more control over the situation. You can decide exactly where you think a stock is going to go and when it's going to go there and how far each direction you want to bet it's going to go, et cetera, et cetera. But the latest strategy for me has been to try to set it up somehow so that my Greeks are what I want them to be. And more specifically, I would like to have optimum would be, especially when UVXY is higher, like today it's up a little bit. Right now trading 1290. When it's up higher, I would like to have a short delta, and I would like to have a collecting theta decay every day. Now, theta decay, some people express that as a negative, some people express it as a positive. So, but if I say I'm collecting theta, then that's pretty clear to you what I mean by that. And if I am buying a far out option and selling a closer option, the closer option is going to decay at a faster rate than the farther one. That's just one of the ways options work. And so in general, if you are long calendar spreads, you bought the far month and you sell the front month, you are going to be collecting money every day. You're also going to be short gamma, so that if stuff moves around too much in one direction, it's not going to be good for you. However, that is offset by the fact that you are long vega. You're long volatility if you're long a calendar spread, because the farther out options have more vega to them than the short shorter options. So if you get a big move, your long vega, because if you get a big move, the volatility of the options on that underlying are going to go higher. Your long vega will offset your short gamma in many cases. So the position that I've been sort of legging in and out of is the calendar spread. And what do I mean when I say legging in and out of? Well, you've got two sides to that spread. You've got the long option and the short option. You can play around with them. For example, for me to initially enter to the calendar spread, I waited until UVXY was in a higher spot. Now, what do I mean by a higher spot? Well, UVXY all-time low is around 850, and all-time high split adjusted is like 1 million or something like that. So, but if we look at like a 180-day chart, which let me move my big mug out of the way here so that we can see this chart a little bit better. There, I'll make myself really small down in the corner here because you really don't need to see me. You know what I look like. Okay, so this is the chart of UVXY over 6 months, and you can see, yeah, it's generally moving lower, but it's taken itself a darn long while to get there. But we can see here in a range, if you were to look at like a high number would be like 14. A low number would be like 10 or 9. And so we can kind of trade in this range. We know that eventually this is going lower, and it's eventually going lower than 10. So don't back up the truck at 10 by any means. However, you might want to sort of flatten out your delta a bit, be either flat or short delta at 10. But you might want to have a bigger short delta if we get up to like 14. So initially, the way I got into my calendar was I bought puts around the 1380 level, and then when things went back down, I sold closer month of the same strike against them. So I essentially legged into a calendar spread with decent prices. Then the time when we go back up again, I can cover that short option that I sold, buy it back in, and that will increase my delta to the downside, and I can hang out until we go back down again, sell the option back out, that sort of thing. And the beauty of being long a calendar spread is that instead of time being against you when you own options, time is now on your side because every day you're collecting a little bit of money. Now, it may not be a ton of money, but it's a little bit of money, and that's great because while everyone else is on vacation or on the weekends, remember, this stuff is decaying all the time. So even over the weekends when the markets are closed, you're still collecting a little money, and that's something that I used to love to do as a market maker, be collecting money all the time. If you watched the most recent interview I did with Mike Butler from Tasty Trade, he was talking about how he loves to sell options. And I also love to sell options. Now, there's risk to selling options, of course. And the advantage of owning calendar spreads over just being naked short calls is that calendar spreads don't get away from you as much. As you get farther and farther away from the strikes, the delta that's associated with those options disappears. So if you're naked short calls, as you go higher and higher, those calls become basically, they turn into the underlying at some point. They become 100 deltas calls against you as the underlying moves way higher. So, for example, if UVXY is trading 10 and I sell the 15 calls, well, at 15, they're only a 50 delta. But if UVXY spikes to 30, all of a sudden those calls are 100 delta calls going against you. And eventually you're going to run out of cash and you're going to receive a margin call and you're going to be forced to cover your position. However, if you happen to be long, say, a put spread, well, you're definitely going to lose money as it goes higher. But the most you can lose is the amount you pay for the spread, or if you're just naked long puts, the amount you pay for this put, and you're not facing a margin call situation if you get a huge spike where you're forced to cover, because nobody wants to be forced to cover their position at the worst prices possible. And most traders, especially trading something like UVXY, would know if it spiked to 30 that it's definitely coming back, and would not, unless forced to, cover their position, because they would know that within hours, days, if not hours, UVXY would be back through 30 again. And and indeed, with UVXY right here around 12, if it were to spike to 30 today, it would be a situation where within days it would be back through 30 again and back down. And that's just the nature of the beast here. And if we look at the February spike, that's kind of what happened. Let's take a look on the chart here at February. So February, UVXY gets to 30, and it's back down almost immediately. And this was one of the biggest VIX moves ever, and it's back down. And since then, we've been in contango for a while, and we've had other means of decay. So if it were to happen today, it would be even more of a thing where it was coming back quickly. So, as we're in turbulence, think that, VIX now up a point in 43 today, trading 1752. Starting to get pretty elevated here. However, we've seen some volatility for the last few days, so you see that maybe we're going to stay at a higher VIX level for a little while here. If you look at this is the yearly chart, you can see us. It is possible that we could stay at the 15 to 17 range here for a little while. However, if that does occur, we will revert into contango, even at that level. Even if we were to go to the 20 to 22 level, we would revert into contango pretty soon after that. And in fact, futures right now are in contango. Now, if we were to stay here at 1753 for a long time, futures may flatten into backwardation. But as of right now, futures are in contango, and therefore there is still a bias to the downside in UVXY right now. Little stuff to think about today. And I want to thank everybody who is watching today. And good luck in the markets. Don't be disheartened when we have an up day in the VIX if you tend to play stuff to the short side, because this is part of the cycle of things. You want to get used to it. You want to expect it. All traders have positions go against them at some point. And I'm sure there's some smack talking on the page of the of StockTwits today. I've been investigating some defense stocks lately, basically thinking, how do I take advantage of the current political system we're in to make money? And some of these defense stocks have made big moves. Now, I don't know if they're going to continue to make big moves, but some of them have been making big moves. And let's see which ones I was looking at. I was looking at HEI for one. Let's look at this. Here's HEI. There's a number of them. Harris. Harris is one of the companies that makes these devices that they call stingrays that the government can listen into cell phone calls with this technology, because they pretend that they're a cell phone tower with these stingray devices, and Harris is one of the companies that makes those. Now, this stuff is all like evil, bad stuff, but the guys who are making money off the military-industrial complex, why let them make all the money? So here's another one. HII, Huntington Ingalls Industries. This one's backed off a little bit recently. Okay, so Huntington Ingalls Industries. This is a $12 billion company, and it's the nation's busiest builder of military ships, recently delivering the amphibious Portland, a 684-foot monster, to the U.S. Navy. It continues to work on the John F. Kennedy, an aircraft carrier that, once completed, will measure more than 1,000 feet end-to-end and carry more than 80 combat aircraft. That's just the beginning of what Huntington brings to the table for the Navy and for its shareholders. Another one on the list, Latos Holdings. Now, this company also, I was looking at the jobs in Antarctica. They're one of the companies who hires executives for the U.S. government. Latos, let's see what. LD, okay, sorry, I got the name wrong. LDOS. David Milan, a managing partner of Birmingham, Michigan-based Cornerstone Financial Services, concedes that Latos Holdings may not be as recognizable as some of the bigger names in the sector, but he also believes that as technology advances, this company should reap the benefits. They provide technology and system engineering services and solutions in defense, intelligence, and health markets, as well as a few others. Okay, so Latos, Lockheed Martin, that's going to sound obvious to many people, making fighter jets. LMT. A lot of these have backed off a little bit recently, which is probably even more evidence that they might be interesting to you. Northrop Grumman, NOC. And Raytheon, RTN. And a lot of them similar type charts right now. Spirit Aerosystems, SPR. So if you're feeling that you want to become part of the military-industrial complex, take advantage of the massive military spending the United States government is doing, these are some possible ways that you can participate in that. United Technologies, UTX. There you go. All right, so we see E-minis down 15 right now, and they're one of the big reasons the market's down, as far as I can tell, is due to the German political situation right now. One of the politicians resigned. Let me see if I can get a story on this here. And that's been roiling the European markets earlier today. Also, just this whole tariff situation is not good for anybody. It says leftist landslide in Mexico. That's not what I was looking for. Merkel's coalition fate hangs in the balance over elusive migrant deal. That's what I was talking about. That seems to be roiling the markets in. Let me put this so you can see it here. It seems to be roiling the markets in Germany. Yahoo says, will divisions over migration split Germany's conservative coalition and spell the end of the line for Chancellor Angela Merkel? German Chancellor Angela Merkel's ruling coalition risks breaking apart Monday as her hardline conservative Bavarian allies pushed a showdown over migrant policies after she was unmoved by her interior minister's threat to resign. So that's who I was talking about. So immigration, an issue in more places than just the United States. But I'm happy today because I don't have much of a delta in UVXY and I'm collecting money every day. So maybe you should consider doing the same. So as we go into the market today, I did come on a little early, but you can obviously catch this non-live in a few minutes once it's uploaded to the channel. If you didn't catch it now or if you're just joining me. And it's great to be here with you, and thanks for watching, and we'll see you next time.